overnight with regards to leadership changes in the FMCG space. HUL has announced the appointment of Rajneet Kohli as the executive director of the foods business. Remember, he's been with Britannia earlier, Jubilant Foodworks, as well as Coca-Cola and Asian Paints as well. We're now joined by Abneesh Roy, who's the executive director of Nuvama Institutional Equities, to discuss this leadership change and the consumer sector in general. Abneesh, it's a very interesting move, right? You call Unilever the leadership factory, and in this, it's the first lateral hire that we've seen in a long time, and this coming in from someone like Britannia. How do you view this as a business opportunity? You've had interactions with Rajneet multiple times as well. What do you think would be his ask here, and what are your expectations from this change?
Yeah, thanks, Mangalam. You are absolutely right. Rare to see HUL hire people from outside at such senior level. So very interesting, I think, because Mr. Rajneet does bring experience of Domino's and around 2.5 years experience of Britannia. Of course, HUL's foods and refreshment business is very large, almost 1/4 of the business, and second largest after home care. So it's very important business. So I will say that currently overall urban slowdown and tea inflation and coffee inflation will be the immediate challenges. But I will say that hiring from outside, from such good companies, I will say will bring a fresh perspective. And generally, we see that HUL and Britannia are always a hiring ground for Mumbai and Bangalore respectively. And here, interesting to see from Britannia this hire. I think overall, it's a good development because this is an important part of the business and there are a few challenges. But leadership changes in FMCG is quite common currently. United Spirits, Nestle, Pidilite, DMart, and more, we are seeing that. So I will say that this is a good development and we'll closely monitor this.
All right. So someone from Bangalore moving to Bombay, we'll keep an eye out on that one. And since you spoke about the consumer environment, we're nearing the end of the fourth quarter. What are your initial expectations? What are your ground checks suggesting? What kind of volume growth can we see across the board? What do you think would be the outperformer here?
Yes, so 2-3 trends currently in March quarter. One, clearly, the temperature has generally been on the higher side, 3-4 degrees higher than normal, and we are hitting again multi-year high this year also in terms of summer. That should benefit Varun Beverages. We expect almost 12% kind of volume growth in Varun Beverages in March quarter versus 4-5% in the past 2 quarters. So there is a step up. Same thing we are also seeing, for example, in Emami. Overall, as a company, we see a 6% kind of volume growth for Emami. And even Marico continues to do well. They are doing really well in their premium consumption in terms of the youth and digital brands. And there we expect 25-30% growth in that part of the business. Overall, in Marico, we expect a 6% growth number. In Nestle also, we are picking up slight recovery versus earlier quarter. Nestle is a company which always comes back. In most other staples companies, it will be a challenging quarter. So we expect almost flattish volumes, for example, for Unilever and Colgate, again, quite tough quarter because the competitive intensity has gone up in toothpaste. Plus, Dabur is growing faster because more rural indexation. So overall in staples, it will be challenging quarter. Alcobev, we continue to remain positive. Of course, United Breweries will see that 12 days of Telangana, no sales will be there. Still, we expect almost mid-single digit growth. So Alcobev, Varun Beverages, Emami, Berger, Pidilite, these will be the companies which will be on the top tier in terms of growth in their respective segments. Most other FMCG will be broadly in the 0 to 2% kind of a volume growth. That's our expectation. In the staple space, margin compression will remain for most companies. So that's because palm oil, tea, etc., copra, etc., continue to be quite inflationary. And FY26 will get more clarity on how the next crop will be.
All right, Abneesh, I missed your view on Trent. You spoke about a lot of stocks, but Trent, there's a big debate out there. The worst, is it behind it? And what about the stock price? The stock corrected from 8,000 to sub 5,000 rupees. In the last 1 month, it's bounced close to around 12% or thereabouts. What's your view? We have a note coming in from Macquarie today as well. They have initiated coverage. They believe it's good for more. Your take?
Yeah, absolutely good question. So we did see that high valuation stocks did correct a lot in the market mayhem, which we saw in the initial part of this calendar year. And after that, we have seen broader market come back. We remain quite positive on Trent. See, in Trent and DMart especially, always this concern keeps coming back on store addition. See, how it works in retail generally is Q4 and March month where the bulk of the store addition happens, because all the regulatory approvals, etc., they are linked to slightly towards the year ending, and that's why in March suddenly we see a big spurt for Trent in terms of the Zudio, in terms of the west side. Similarly for DMart also we are picking up similar, that suddenly store addition picks up every year in the March later half, and that addresses the investor concern. So we remain quite positive that in spite of Shein being launched from Reliance, etc., in our view, both can coexist. Shein will take a lot of time to scale up, plus understanding the Indian overall consumer. It takes time, right? So we are quite positive on Trent. This was a good buying opportunity in my view, and after that, as you rightly said, there is some up move in the stock. From a medium long term, I think Trent will remain on the top tier growth within the retail space. And in retail, we like Trent, we like Jubilant Foods, and we like V-Mart also. On D-Mart, store addition is picking up, but because of Zepto's overall higher discounting, because they are going after the market share, I think margins for most of the grocery retailers, both quick commerce and on this side, I think that could remain challenging.
You did mention Jubilant Foodworks briefly. You also mentioned, Paints, Berger Paints as one of your picks, and Pidilite as well. So just wanted your thoughts on the QSR versus food aggregator debate, which is currently going on. Most on the street believe that maybe the next leg of consumption recovery will come in via QSRs and not food aggregators, because of their repurposing, value focus, and also at the same time them having work towards their own delivery fleet, etc. as well. So I wanted your thoughts on that. And the second part was on Paints and Pidilite. What do you think would be your top picks here?
Yeah, I'll take the second part of the question first. So in Paints, we have a clear preference for Berger. And that's not because there is any execution issue with Asian Paint. It's just that Berger is more of rural India, more of eastern and central India. So there the slowdown is lesser. Asian Paints, our sense is we expect around 3 to 4% volume growth in Q4. Against that, in Berger, we expect almost 9% volume growth. This was there even in March, in the December quarter. We expect that trend to continue. Pidilite remains a very strong compounding story, and they are targeting new consumption verticals in terms of EVs and the mobile manufacturing adhesive usage. Yes, Mr. Bharat Puri has done a commendable job, but I think Sudhanshu Vats clearly last 2-3 years has got trained under him. So we remain quite positive on Pidilite. And we see that in spite of some issues of the real estate slowdown, how it works is there is a 1 year to 3 year lag between Pidilite getting that consumption and the real estate projects getting launched. So we see that next 2-3 years, I think, for Pidilite remains strong. Now, coming back to the QSR, we see more of a market share gain for Jubilant Foods. So clearly, in terms of the value offering, they have done really well, and they're gaining market share from rest of the players in that space. So it's more of a selective call on Jubilant Foods. That's why we are quite positive. And you are right, in the broader quick commerce, we are seeing more players launch, and there is a unlisted player, Zepto, which is obviously quite aggressive. That does impact discounting, which is negative for the grocery retailers and maybe some of the other food companies. But Jubilant Foods clearly going after market share expansion in pizza, plus new verticals in terms of the chicken also, they are scaling up. So we are positive selectively in QSR space.
All right, Avnish, thank you so much for joining in. See you around. We'll have a conversation with you before the result season and during results as well. Have a good one. Have a good day. Right, with that, we'll step into a short break. And as